What's up, y'all?
What's going on?
What's happening?
No, it's not usual that I like to bogart and take over the front end of this call, but if I do it ever, Jared, it's for great reason.
Let's go.
You got to understand that, right? Like, absolutely great reason, but I'm going to turn this over to Jared. He's got a phenomenal training for y'all lined up today. But I got to share something real quick. Y'all cool with that?
Cool.
All right. I want to share our newest member of leadership management, Diane Crump, and the Crump Agency going over $50,000 by the 20th.
Yeah.
So y'all give it up for Diane Crump. We've got Chalet, who is, one of the lady managers and crushing it with us, but we're looking for some more lady boss babes to step up in this agency. And I'm proud.
And I've been trying to sneak in that back door. Now I'm coming in.
I love it.
I know you have. So I'm proud of what you guys have accomplished. It was absolutely a team effort. And you're not even slowing down. I've got you projected. We talked about a big goal. You guys are still pushing. So keep pushing to the EOM. And I'm just excited for what you're doing, Diane.
Thank you. Thank you.
Proud of you. So I want to announce that. Proud of Diane and the entire Crump Agency. Y'all are kicking some tail. I don't know who's next, but there's room at the top. Y'all come with us. Jared, I'm going to give this to you, bro. I'm going to give you the host code. Bam. Floor's yours.
Sweet. Guys, how's it going? So I'm super excited to be able to be sharing with you guys today. I am going to be going over a couple of different things, just basically about how I do my presentation. I'm going to go over my financial analysis. It's a little bit different than how Mark does his. And I'm going to go over how I explain mortgage protection and equity protection and draw some emotion out of the sale. We're getting back into a lot of mortgage protection sales, and mortgage protection is going to be ramping up even more than it has been this year because rates are going to be coming down. So I thought it would be a great time to dive in on this and really start honing in on our mortgage protection skills. So real quick, I am going to employ two friends of mine. Sean Bennett and Danielle White are going to be helping me out a little bit with this. They're going to be a little husband-wife duo. If you want, you can take your view and click on speaker. That way you will be seeing the person that is speaking rather than a whole host of people. You don't have to do it, but you can, if that might help you guys out to understand what's going on. But real quick, let me share my screen with you. Hope you got a pen and paper handy. We are recording this, but I want you guys to have a pen and paper handy. But this right here, I'm going to move you guys over here, bro. Perfect. So this is essentially what I ask for in my financial analysis. Super easy. I can throw it up in the GT agency, but I want to know mortgage, what their payment is, equity. I want to know income for both people. I want to know about their life insurance. I want to know about their debt and anything that might act like life insurance, right? So I'm going to show that up. But do we have Sean and Danielle here? You guys there?
Yep, I'm here.
Sweet.
I'm here.
Danielle, you there?
Yes.
I see you. Perfect. So I made up a little mock presentation. So guys, a lot of times, particularly if you're brand new, you don't know what to do. You should be looking at the presentations that we have up there. We even have some actual presentations for you guys to be looking at, but everybody does it a little bit different. So I'm going to just kind of jump into my presentation, post like the first 5-10 minutes of my presentation. I don't talk about anything other than the people, right? Just building rapport. And so when I'm doing my presentation, I'm building rapport, I'm talking about them, I'm showing them pictures of my family and that kind of stuff. But then I pop this up, and this is where I get the why. I get the why right up top. So this is where we're kind of jump in. I'm going to be pausing here and there to tell you why I'm saying the things that I'm saying. But so Sean and Danielle Benight uh, just kind of mashed y'all up together. So, guys, that is amazing. I love hearing about people's lives, how you guys met. And thanks for just sharing a little bit about that. You know, nobody ever talks anymore. Everybody just sits and texts on the phone. So I love to sit and talk for a little bit. But guys, this is originally what you guys filled out and sent back to us. So first of all, who filled this out? Sean, did you or Danielle fill this out?
Yeah, I filled it out.
You filled it out? Okay. Walk me through, what was your big concern and what were you guys thinking about when you filled this out and sent it back to us?
Well, a big part of it, we fought hard for where we needed to be, and we've got equity in the property, and with life, you just never know what's going to happen. So, I'd
It's
rather be
true.
protected than not.
Absolutely. Now, Danielle, I want you to know what kind of man you have here.
Oh, I know. He's wonderful.
Because let me tell you, I do this a lot. And 90% of the time, it's the female sending this in to be sure that she's going to be okay because she's scared. But he loves you so much that he wants to be sure that if something happened to him, you'd be okay.
Yeah, it's wonderful.
That's a good man right there. Pause. So I just built him up now. So now he's going to feel really bad if he says he doesn't want to get it. Right?
Mm-hmm.
Again. All right. So guys, basically what we're going to do real quick, we're going to go over all this information you guys sent in. We're going to be sure it's correct. We're going to do a quick little financial analysis. I'm going to explain to you a little bit about mortgage protection and equity protection, how it helps a family. I'm going to show you guys 3 different options for each of you. You guys are in control of the budget. Pick what works for you, and then we'll fill out an application to see if we can get you approved. Sound good? Perfect.
Perfect.
Pause. That's a soft close. So I already just told all my clients that were filling out an application today. I gave them the illusion that they were in control, that they get to pick, but I'm in control of the choices. So it's all about illusion of control. All right, guys? So at this point, I stopped sharing my screen actually, and I just talk face to face. I like talking face to face with my clients. I feel like it's more natural. Some people do not, and that's fine. Everybody can do it their own way. But this is basically the information that I'm going to be going over and asking them. So I'm going to leave this up for people to take a look at. So, Sean, I see here that you got your loan amount here right at 280,000. Is that right?
Yeah, something about there, right around there.
Perfect. Now, did you guys end up putting that on a traditional 30-year loan or a 15-year loan?
We did a 30.
Perfect. I love 30-year loans. This is why. You can pay that sucker off sooner if you want to, but you don't have to, right? And you're locking in that really good interest rate. Speaking of, what'd you get? Do you remember what kind of interest rate you got?
Yeah, we're actually right around 4.5%.
That's amazing. Oh my word. You guys did great. The people I just met with earlier tonight, they're like at 5.5. You guys did great. Wow. Time. Compliment people. Nobody really knows if they did good or not. Nope. Who's marking on my stuff?
I'm sorry. Sorry.
I don't think that's you.
No.
Anyways,
I don't know who it is.
if somebody can undo all that, that would be great. But guys, compliment your clients. They don't know if they got a good deal or not. I don't care if their mortgage rate is 8%. Compliment them and say the person you just met with had 8.5. Okay. It will make them feel better because this is a crazy thing that people don't go through every day. And they just want to know that they did a good thing, right? So perfect. Well, that's great. Great job. Now, Sean, when you got your mortgage, did your mortgage banker talk to you about biweekly payments at all?
I don't think so.
Okay. Hold on one second, guys.
There we go.
That was annoying me. All right, so we're back. So they didn't talk to you about biweekly payments? Okay, so ballpark, what's your mortgage payment each month?
We pay about 28, or no, I'm sorry, 1,800 a month.
About 1,800 a month? Okay, so instead of paying that 1,800 once a month, Sean, what you do is you take half the amount, just cut it in half, $900, right?
Mhm.
And you pay that every 2 weeks. All right. So like every other Friday. Have you ever gotten paid biweekly?
Yes.
Okay. So you know that there's those 2 months during the year where you get 3 paychecks instead of 2, right?
Oh yeah.
I call those glory months, right? It would be the same thing if you decided to do this. There would be 2 months during the year where you made 3 $900 payments instead of 2. And so you end up making an additional $1,800 payment each year. That extra $1,800 is going all to your principal, knocking that down faster, and it's going to save you tens of thousands of dollars in interest. Shaves about 6 to 7 years off a 30-year note.
Wow.
Yeah.
That's
Yeah. And I mean, obviously, I don't have anything to do with this. You know, you take care of it with the bank if you want to, but I just like to bring a little bit of value and educate people because the bank does want you to know about this, right?
Mhm.
Right.
The bank wants you keeping that money as long as possible because that's how they make their money, right?
Yeah, absolutely.
Time. What I just did there is I just built an alliance with my clients. Us against the bank, right? I'm giving them value that costs them nothing and building an alliance with my clients against the bank. That's what we did there. Okay, back in. So that's great. Good job. Now, Sean, let me ask you this. You mentioned you had some equity in the home. You know, if you're going to put the home on the market today, what would you put it on the market for?
Probably between like maybe 480 and 520, something in that range.
That's great. You know, I don't like to overinflate things. You know, we can just take that 480, but that's huge because you already have $200,000 of equity inside your walls. You know, that's your money. You know, we know we owe the bank what we owe the bank, you know, but that 200, that extra 200, that's yours and that needs to be protected. So that's great. Good for you. Time. What have I just done? I have set myself up for mortgage payment protection. And the fact that protecting their equity in their home is a really big deal because it is. Okay. So I've already laid the precursor for that. Okay. Time in. Okay, Sean. So, Sean, what do you do for a living, man?
I'm actually retired military.
Oh, you're retired military? That's great. Thank you for your service. What branch were you in?
I was a Marine.
Oh, thank you so much for your service. Oh, where was the favorite place that you were stationed?
We were out in North Carolina.
North Carolina. Oh my gosh, I love that. I have a ton of friends that live in North Carolina. It's one of my favorite states to visit. You know, if I didn't live in Tennessee, I'd probably move to North Carolina, honestly.
Cool.
So
Yeah,
that's very cool. That's great. How many years did you serve?
20.
20. Thank you so much for your service. You got a full pension. That's great. Are you working now, or you just retired living the good life?
Yeah, I'm pretty much retired living the good life. I got a lot, multiple income streams coming in, so you know, no need to work.
Hey, that's great. So ballpark from your pension, what would you say that you brought into the house on a monthly basis after they take all the junk out?
Probably about taking home maybe 5,500.
5,500 from your pension. That's great. Now, I have a lot of clients that are military. I know a lot of times you get VA disability. Do you have any VA disability for you?
Yeah, it's small though. It's like about 1,500 a month.
About 15, an extra 1,500 a month. Okay, so you're probably not 100% disabled. You're probably about what, 20, 25?
Yeah, about 25%.
25% disability. Okay, perfect. Well, I'm glad that you have that. Now, let me ask you this. On that 5,500, is there any survivorship for Danielle?
What do you mean by that?
Like if something happened to you, is she going to continue to get all of that 5,500, part of that 5,500, none of it?
You know, that's a good question.
Okay.
That I'm not sure. I'd have to check.
Not a problem. Typically, so you elect it typically at the time that you set up your pension. Normal is 50%, but sometimes, you get a higher payout if you don't have any survivorship. Do you know if you took the higher payout?
Yeah, I probably took the higher payout. Yeah.
Okay, so none of that 5,500 is going to go over to Danielle if something happens to you. Perfect. And then that VA disability, again, thank you for your service. I can tell you from my clients, uh, there's no survivorship on that VA disability until you get to 100%. Once you're at 100%, you got to be there for a little bit of time. Then there can be some survivorship on there, but that's good. But no, that's great. Same question to you, Danielle. What do you do for a living?
So I recently opened up a daycare at the house.
Really?
Yes, I had walked away from corporate America so that Sean and I could start a family.
Aww.
Yeah, and so I've been able to raise our 2 children. And now I just decided to make a little bit extra money to help out with groceries because of the price of inflation. So we just opened up a little small
Absolutely.
daycare for something to do.
That's awesome. How many kiddos do you guys have?
2,
2. That's great. Boys, girls?
a boy and a
Yeah.
girl.
Boy and a girl? I love
Yeah.
it.
What?
I don't know. Somebody's not muted.
Okay.
That's awesome. Well, from your daycare, ballpark, what do you bring into the house on a monthly basis after they take all the stuff out of that?
2,000, 2,500. I only watch like a couple kids, and I don't
Okay.
charge a full blown, expensive price. It's mostly close friends or family, if you will.
Right. Perfect. So yeah, no, that's great. And thankful. Any other income coming in on your side from any other places? Mary Kay, any side hustles?
No, not at this
Nope.
time.
Okay,
I got my
perfect.
hands full.
Yeah, no, I mean, you guys are doing great, but I mean, I can really see why this was a concern for Sean, because you got a big bulk of the income coming in on your side, so I can see why this is important to you. So perfect. Do you guys have any sort of life insurance, Sean?
I just got like a 10-year term. It's like
Okay.
300,000.
Perfect. How long have you had that?
I'm year 7 into 10.
Year 7 into 10? Okay, perfect. Very good. Glad that you have that. And that's really meant for income replacement. If something were to happen to you, help replace some of that income. So I'm thankful that you have it. Any other life insurance that you have, Sean?
No, that's it.
Great. Danielle, what about you? You have any life insurance?
No, not at this time, because when I walked away from corporate America, I realized that I just had a group plan, and paperwork got lost in the shuffle, and I never received any information about how to keep it going. So, and then we started getting busy trying to have a family, and I just, lost track.
Out of sight, out of mind, right?
Yeah, right. Mm-hmm.
Well, that's definitely something that I can help you with. And you'd be surprised. I mean, most of my clients have group insurance. If they got a 9 to 5, they have group insurance time. What I just did was I told them that all my clients already have group insurance anyways. So they can't use that as an excuse, right? Time out. But that's exactly right. Group insurance, that's a benefit that you get just for working there. But what most people don't realize is that it's not a policy you own.
Right.
So if you ever left your job either by your own choice or not by your own choice, it didn't come with. So that's why it's always good that you have a policy outside of work that you own and control. And we can definitely take a look at that to be sure that we can get that taken care of for you. Any other large debts other than the house? I know you said you just refinanced the house, paid off some debt. Do you have any other debts? I don't include car loans either.
Yeah, maybe just a little bit of credit card debt, but nothing too bad.
Okay. Over 30 or under 30?
Under.
Under.
Oh, yeah,
You guys are
under
doing
30.
great. You guys are doing great. You know what the average credit card debt is in the state of Tennessee?
No.
50 grand.
Oh,
50
my
grand.
goodness.
Yeah. So you guys are
Wow.
doing amazing. Good for you. Good for you. And then last question real quick here. Do you guys have anything that might have acted like a life insurance policy if something were to have happened yesterday? Something that would knock that 280 down a bit. Maybe an old 401k, old IRA, savings in the bank larger than an emergency fund.
Yes, I have my old 401k from corporate America.
Okay, great. Ballpark, how much is in there?
Well, with the crash, I lost a lot, but I think that Sean, isn't there like 175,000 in there?
Yeah, that's probably right around there.
175. Okay, perfect. Very good. Yeah, and we're just talking in issues today, so that's perfect. Yeah, just kind of get us in the ballpark. Sean, anything like that for you? Any old 401k, IRAs, anything like that? Old TSP from the military?
Yeah, I got one that has about 2.25.
2.25. Perfect.
Yeah.
Well, guys, this is exactly what we're talking about because if something were to have happened yesterday, that 2.25 or that 175 would go towards knocking down that 280, right? So good for you. Good for you for saving. Now, this is something that we help people with as well. And what I tell all my clients is your money can do three things. Your money can go up, it can go down, or it can just stay right where it was. And if I could show you guys a way to eliminate one of those three things, which one would you want eliminated? The go up, the go down, or the stay the same?
The down.
The down. For sure.
Absolutely. And that's what we show people how to do, And so, maybe it's a fit, maybe it's not, but, we'll take a quick look at it a little later. And if it's fit, great. If not, you got free education. Sound fair?
Yeah, that sounds good.
Absolutely.
Perfect. Now, let me talk to you a little bit about mortgage protection and equity protection, how it helps a family. Basically does three things. The first thing that mortgage protection is and does is that it has a death benefit, okay? So this is a form of life insurance. We gear it towards helping you with your home, and there are some good things and bad things about a death benefit, okay? Number one good thing about a death benefit is there is no probate, okay? So there's no time delay, lawyers aren't getting involved, state's not getting involved, none of that stuff, okay? Have you guys ever had to settle in the state before?
I'm sorry,
Yes.
say it one more time.
Have you ever had to settle in a state before for a family member?
Oh, yeah.
Yes.
Yeah.
Yeah.
It's
You guys know.
sometimes it can become a headache.
Oh, yeah. 6 months to a year is typical, right? And so when somebody passes, you tend to need money sooner than later. So the fact that there's no time delay on this, that's a big deal.
Cool.
The other great thing about a death benefit is there's no income tax due on a death benefit. So Uncle Sam is not going to be taking any of your money either. Because quite frankly, in my opinion, they take enough as it is, right?
Yes.
Now, the downside to a death benefit is that somebody has to go. It's never fun to think about, but it's reality. All three of us are going to go one day. We just hope it's later on down the road, right?
Yes.
So because of that, they have actually figured out a way that you can have your cake and eat it too. And these are called living benefits. Can you guys see that?
Mhm.
Perfect.
Yes.
So, Sean, can you see this up here? It says critical illness. Can you read that for me real quick?
Yeah, allows you to take up to 95% of your policy death benefit if you're diagnosed with ALS, life-threatening cancer, kidney failure, heart attack, major organ failure, or stroke.
Exactly. This is a big deal, guys. I mean, I'm not talking about breaking your ankle, being out of work for a couple of weeks, but something critical, life-threatening, right? You can get up to 95% of that death benefit while you're alive, right? Same thing here for chronic illness. Now, what I consider chronic illness, the best example I can give you, you're in a car accident and you just can't use your legs anymore, right? And that is going to qualify you for up to that 95% as well. And then the last one here is called terminal illness. This is, hey, doc gives you bad diagnosis, 12 months to live, get your affairs in order, that sort of thing. And that's going to qualify you for up to 95% as well. Okay. So this is a very big deal. All right. Now, third thing I want to tell you about, I actually want to tell you a quick little story. It's about a personal friend of mine. His name's Bill South, and Bill lives down in Florida. And he's one of these guys that he has a big old personality, right? He walks into the cafe in the morning to see all his buddies, and everybody just goes, Bill! Kind of like Norm from Cheers. You guys remember that show Cheers from back in the 80s?
Oh, yeah.
Yeah, no, everybody knows and loves Bill. And his entire family has lived down in Florida their entire lives. He has a younger brother down there as well. His name's Alan. And Alan's married to this lovely lady named Linda. And it was always Alan's dream that when he retired, he wanted to move up to Nashville, Tennessee, and he wanted to go write some country music. I was like, if that's what you want to do, come on, right? And I tell you what, time came for him to retire. He did just that. Sold his place down in Florida, moved up to Tennessee. And I tell you what, it was not long that he was playing guitar up and down Music Row. But I got to tell you something else, Danielle. He was not very good. But he was having a good time, and that's all that mattered, right?
Yeah.
So a few months on down the road, he started noticing he was having a little bit of a tingle in his right hand. And like a typical guy, go to the doctor. Because Sean, us guys, we don't go to the doctor unless our arm falls off, right?
Never. Yep.
He didn't go either. He got the same tingle in his left hand. And
Ooh.
when that happened, he knew something was up.
Yeah.
Long story short, went to the doctor, did a bunch of tests. Turned out he had a very rare case of Parkinson's.
Oh.
Yeah. Now, I don't know what y'all know about that particular disease, but it's neurological that affects your brain. Typically, it only affects half your brain, right? And that is why Muhammad Ali, you guys remember Muhammad Ali, the boxer?
Oh yeah.
Yeah, he had Parkinson's and only affected half of his brain. And that's why he was still able to light the torch at the Olympic Games when he did that.
Mhm.
But this kind of Allen had gotten affected both sides.
Yeah.
And within 3 months, took him down to the point that he was bedridden and he couldn't do anything anymore.
Wow.
Now, Linda, his wife, needed some help to care for him beyond what she knew how to do. She wasn't a trained nurse. Just for the help to come to the house, it was over $5,000 a month.
Oh, yeah.
And he was in that condition for over 3 years before he passed. Because Parkinson's is really slow.
Wow.
Yeah, you can do the math in your head. That's a ton of money.
Yeah.
Now, he ended up passing in December 2015. My friend Bill came to go to the service, and afterwards, he and Linda were talking, just consoling each other. You know how you do in those situations. Right in the middle of that conversation, she just broke down. And she said, Bill, I have no idea what I'm going to do. We have spent all the money we saved for retirement and just taking care of Alan. And I haven't even been able to make the mortgage payment in the last 3 months. Bill said, you need to go to the bank and you need to tell them what's going on and you need to do it quick. So she did, kind of went down there, explained the situation, what was going on, right? You can probably imagine. Banker looked her dead in the eye, said, hey, I'm real sorry for your loss, but the best thing I can do is give you 3 months to try to catch up on that loan. You won't ever be able to be late again after that, or we're going to have to come take the house. And furthermore, because you're already so far behind, you need to sign right here that you understand what we just told you before you leave today, or we're going to have to start that whole process right now. And they basically made her sign. So she did the only thing she knew to do. She came home, called some friends, pulled together a few $100, painted the inside of the house, outside of the house, trimmed the bushes, cut the lawn. Those are the things that you don't keep up with, She put her house on the market. She had about 6 or 7 showings, no offers, and then May rolled around. Knock, knock, knock on the front door. There's the banker. Brought with 2 visitors. First one, that was a sheriff. Sheriff said, hey, Linda, you got to come with me. Set her out on the front curb, and that was the last time she was ever in her home. Second visitor was a moving company. They came and took everything down off the walls, kitchen table, couches, had a little dog, took her dog, set everything outside next to her. Now, silver lining of this story, she had some wonderful neighbors. They'd been bringing food by. You take casseroles and stuff by to people going through stuff, like at church, They saw what was going on. They knew what was happening. So they took together a collection real quick for her, got her enough money for a U-Haul, storage unit, little spending money, go get a room, that sort of thing. But she's never going to be the same. And that's the thing. The bank doesn't care what happens to you. The only thing the bank cares about is where is that next payment. That's all they care about. And if they would have had a plan like this, that death benefit, no probate. It would have paid out right away and she would have been able to catch up on the loan right away. If they had some living benefits, they would have been able to use those as he was sick rather than get behind a start, right? But ultimately, what she really needed and had absolutely none of was a little bit of time. It's tough to lose someone that you love. And it doesn't matter if it's a parent, spouse, or a child. But to lose your home at the same time that you're going through that, that's like a next level of grief, right? And she needed some time to heal and grieve, but didn't have it because she was working off the bank's timetable, not her own. And in this particular instance, she also needed a little bit of time to get her house sold. Because the rub of this story, and it's the reason why I tell it, when the bank sold her house 2 months later, she just needed an extra couple months. They ended up selling it in such a way that she ended up losing over $100,000 worth of equity that was in her home.
Horrible.
And she could have used that.
Sean, you better take
Yeah.
care of us, Sean.
Yeah. She could have used that to take that on to whatever was next for her, right? And that is really what mortgage protection is, what it does, and how it helps a family. Okay. Pause. So guys, that's my financial analysis, educating on mortgage protection, and building the emotion.
Mhm.
Stories sell. And that was a very elaborate story. I've told it 1,000+ times. You don't have to tell it quite like that, but every little detail that you add in to a story makes it that much more real, right? So learn how to tell stories, but the number one thing about that is it shows how having something to protect time and buy time for your clients is a great thing. And I do all three of those. It does not matter if I'm talking to a 20-year-old or if I'm talking to a 70-year-old. I do it the same way every single time. Okay. If I know that I'm going to only be showing people final expense because that's what they qualify for, I am not going to talk about critical and chronic, but I will talk about terminal. So I still talk about living benefits. I just don't talk about the critical and chronic. Okay. But that's how that all goes. Did you guys see how seamless it was?
Mhm.
Just having a conversation, guys. Just having a conversation. Does anybody have any questions on anything? Just unmute and yell. You're good if you have one. If I did so well, nobody has any questions. That's great. I'm assuming you guys can go do that presentation tonight, right?
How can we get a copy of the paper that you use?
I'll throw it up in the GT agency. Yes, ma'am.
All right.
Hey, Jared,
Anybody?
I have a
Yes.
question for you.
What you got?
When you're doing this, how long does it take for you to go through your presentation on average with someone that's not being difficult?
Nobody's ever difficult with me anymore, Nelson, quite frankly, because I have built so much rapport up front that by the time we start doing all this, we're just friends having a conversation, right? So rapport building can be however long that is. I don't talk about insurance for 10 minutes at least. That's kind of my goal. I don't want to talk about insurance for at least 10 minutes, but never less than 5, you know? But what I've noticed about new people in particular now is that when you get nervous, the first thing you want to do is just jump in right away,
Exactly.
you know? So on average, up until this point where we are, and this is where I go in, after this, I verify all the health information and then I show the options, right? So up until this point, probably 20 minutes, 25, 30 minutes. It's not long, you know, because I am the cruise ship director. I'm the one in control. Nobody else is in control. I give them the illusion that they're in control, but nobody else is in control. Did that answer your question?
So about an hour, would you say, with the average person, start to finish, before you start an application, that is?
Yeah,
Would you say 45 minutes?
I think 45 minutes is plenty before an application.
And then you do the applications, and if you're face to face, maybe another half an hour, 45 minutes.
Yeah, yeah. You know, when I'm doing virtual like this, I allow for an hour and a half to 2 hours per shot. And if I feel like somebody's going to no-show me or it's not good, I'll book in tighter. You know? Any other questions? Guys, I want to tell you how important it is to do a financial analysis. Mark goes into a lot of depth and he's really great at that. But I wanted to show this to you because it's literally just a few things, 4 or 5 things. But you're getting so much information from it. You're putting together basically a picture of, hey, bulk of the money's coming in over here with Sean, right? Danielle, she's taking care of the kids. She doesn't have any life insurance, right? We found out about other debt. The reason I ask about other debt, because if they have something else, you can raise that death benefit up of their mortgage to cover all their debt, not just their mortgage, and get an additional sale out of it, right? I always ask about the life insurance because I don't want it coming up at the end and have it be an objection. Oh, this is all great, but this just sounds like life insurance. Yes, it is. That's what we talked about. It's life insurance we gear towards helping you with your mortgage. Well, I already have some life insurance, right? Well, where do you go from there if you don't have the information? So you have to get the information. Don't be afraid to ask for it, but then you assign it a purpose. Oh, that's really meant for income replacement. Oh, it's a 10-year term. You're 7 years in. So you only got coverage for the next 3 years, you know? Oh, that's, you have a $30,000 whole life. That's really meant for your final expenses, right? Nobody wants to leave a bill to their family. So you assign it a purpose so that it does not become an objection later. And then that fourth thing, which is finding the annuity money. This is how I find all my annuity money. Do you have anything that might act like a life insurance policy if something were to have happened yesterday? Old 401k, old IRA, any savings in the bank larger than an emergency fund? And then shut up. If you don't make it a big deal, they won't make it a big deal. And they will tell you. And I say things like ballpark-ish, you know? And then if they're really hemming and hawing and you can tell that they have something, but they don't want to tell you, it's like, listen, you can make a number up. I don't care. But the information that you give me is going to be directly proportional to how well I'm able to help you. Right? You just make it easy peasy. Holly, what you got?
So when you talk about annuity in their 401k, how would you switch that if they say that they have a 401k and they don't want to keep seeing it drop?
Great. No, that's a great question. Oh, so yeah, let's play it out. So Holly, do you have a 401k, old IRA, savings in the bank larger than an emergency fund?
401k.
You got 401k? Perfect. Is that a current 401k or an old 401k?
It's current.
Perfect. Perfect. So are you currently contributing to that or how do you like it?
It's okay. I noticed that it goes up and down.
It definitely will.
Yeah, it's through my work.
It's through your work? Okay, perfect. Do they match anything for you?
Yes, they do match it.
Perfect. Do they match 100% or 50%?
50%.
50% up to what, like 4 or 5%?
About 4%.
Okay. Are you contributing over the match or under the match?
About 5%. So a little bit over.
A little bit over. Okay. Well, listen, it's hard to beat free money. And, you know, a 401k, what that is, you know, it's deferred money. You're not paying your taxes now, right? You're going to pay your taxes when you take it out in retirement, right? So what that match really does, it helps cover the tax bill on the back end, but you're contributing more than the match. And so there's probably a place that we can put that not only are you going to eliminate any losses, only ever going to go up, but you're also going to have access to that money all along the way. Unlike a 401k, and you can't get to that money till you're 59 and a half. So probably worth 5 or 10 minutes of your time for us to just sit down and go over that. We'll talk about it, you know, on another day, and we'll set up a meeting to go over it. If it's a fit, great. If not, you got a free education. Sound fair?
Sounds fair.
So I just found overage of a 401k contribution that we can now be putting into an IUL potentially. But I'm not talking about it right now because I have to fulfill why I'm sitting in front of her, which is mortgage protection. It is easy to go down the rabbit hole and talk about these things like annuities and IULs that we all love and we love to talk about. However, that's not why you're there. You get the information, throw a little bit of bait out, hook them a little bit, like, hey, that's something you're gonna want to know about, right? And then we do what's called a BAM, book a meeting from a meeting. Close out the mortgage protection. While you're in your warm down, you wrap back around to the, hey, remember you were talking about that overage you were putting in your 401k? Well, when would be a good time for us to sit down and go over that? Are you working or having appointments later today or tomorrow? I know we've been talking a lot right now, but when would be a good time to go over that? Right? And you go ahead and book a meeting while you're in the meeting. So, great question. Any others?
No, I'm still on the zone.
You're in the zone?
So so say we went with what you're selling, and so what are you writing for us exactly?
I didn't go into
Gotcha. Like
product.
if we had 15 years left on the mortgage,
If you have 50, so the whole idea is you want to, if you're able, match the mortgage up with the specific amount of term. If you have a 30-year mortgage, you do a 30-year term. If you have a 15-year mortgage, you do a 15-year term, right? And we always show 3 options. Any more than 3, people are going to want to think about it. Any less than 3, they're going to want to go shop. So, but I didn't go into that just because we didn't have time to go into that. But Kim, what you got?
All right, so right there towards the end, you said something about you just go over terminal. So if there's, the difference between what the husband can get versus what the wife can get, and it's, FE versus, one, you're talking about mortgage protection, MPP, the other you're talking about MP. So it kind of went really fast. So you only talk about the terminal.
I didn't talk about any product. I hadn't talked about a product yet. I just told them about mortgage protection.
No, not the product itself. I heard you say about the living benefits that they get. I think you said that
so if I'm talking to somebody and I already know because I have their health profile that they're not going to qualify for term and have normal critical, chronic, and terminal living benefits, I will always talk to them about a terminal illness. And your question is, what happens if one of them qualifies for living benefits, but one of them doesn't, right? So what I'll do is I'll go over all of them, but I'll dangle the carrot out there if we can get you qualified for this, So I'll highlight it. I might not go quite into as much depth, but it's like, so they have this thing that you can have your cake and eat it too. These are called living benefits. And what a living benefit is, it's exactly what it sounds like. It's a benefit you get to have while you're alive. Because what most people don't realize is that most foreclosures on a home happen not due to a death, but due to an illness, increased medical costs, right? So what they say is, hey, if you were to get cancer, heart attack, stroke, and need a kidney transplant, if we can get you qualified for this, you can get up to 95% of that death benefit while you're ahead of time. If you're in a car accident and you live, you just can't go to work anymore. If we can get you qualified for this, it's going to give you up to 95% of that death benefit ahead of time. Or, if the doc gives you a bad diagnosis, get your affairs in order. You got 12 months. It's going to be able to get you up to 95% of that death benefit. So you notice how I said, if we can get you qualified and up to, I don't guarantee anything, but I said, all right.
Okay.
Good question. Good question.
I like that. Thank you.
You're welcome. Anything else? Nell, Mark, Lake, anything you want to add in?
Yeah, all I want to say is I really hope you guys noticed a totally different style between Mark and from me. But what we all share in common is whatever we do is masterful. Did you notice there was not one nook or cranny that this man didn't rehearse, practice, master, and be ready for? Guys, none of the plans that we do are better than the other one. There's nothing I do better than Mark or he better than Jared. But you know what? Whatever we do, we mastered. So I'm going to encourage you, get with your growing up line and seek the depth of mastery that you just witnessed from Jared. Jared, I don't think I've ever seen you do one so good as you did tonight.
Oh, thanks, buddy. And yeah, you know, Nell's exactly right. You have to be a master of your craft. And there may be something that I did tonight that you can take and put in with you. Always run by your upline, but you know, be a master at whatever it is that you're doing. I see we have one other question. Delilah?
Yes, sir. When they do withdraw the 95%, or like you say, up to 95%, but later on down that time, like, oh, a miracle, you know, they're cured or whatever the case may be, they no longer need to be going through that critical illness or that terminal illness treatment, and they're A-okay healthy. With that death benefit that just got withdrawn, whether that's 3 years ago or 30 years ago, whichever the case may be, will it recover back to its original value, or is basically going to be, okay, that's what I need to know.
Yep, no. So what I always tell people, I mean, when you get into actually using the living benefits, there's a lot of things that go into that factor, okay? They look at the doctor. They look at the severity of the illness, right? There's a difference between cancer stage 1 and cancer stage 5. There's a difference between needing a heart transplant in the next month and I need a, you know, I have kidney disease stage 3 and I need a kidney, right? There's differences in that. So they're going to qualify for different things, but the easiest thing to do is never get into the weeds with a client and go over specifics, because there's no way that you can give them a definitive answer. But what I always say is, hey, and I normally go over this in the application when they're talking about the accelerated death benefits. I was like, hey, so this is talking about the accelerated death benefit. And really what this means is if you need to accelerate that death benefit for any reason, it just comes off the back end. It does not make more money. Okay. And so that's what this signature here is saying, that you understand that it's not going to make more money.
And it also depends upon the time that they've been in the policy. Like if they've been in the policy for a year, they're not going to get up to 95%. So it's really about, like Jared said, and I explained to the customer just like that. So I say, it's like getting into a car accident. If you get into a car accident, you call the insurance company, you file the claim, they'll call the mechanic. How much does it cost to fix? And then they'll send the money. It's the same principle. If you have a heart attack and you can't work and you need to have access to your policy to pay your mortgage, medical bills, you know, whatever it may be, you call up, you file a claim. They're going to call the doctor. How severe is it? And how long have you been in the policy? And that's how they determine what percentage that they'll allot to you. Now they could say, we're going to give you up to 75%. And you could say, well, I only need 25% to get by. Because remember, whatever you take up front will come off the death benefit at the end to your spouse. That's how I put it. So hopefully that would help out. Now, the other question I have for you though, Jared, is
what you got?
Let's say they take out that 25%.
Yeah.
Can they pay it back?
I do not believe that that can get paid back, because it is not like a cash value life insurance policy. You know, you can take cash out and pay cash back, but you're actually altering the death benefit, and the contract is being fulfilled by using that accelerated death benefit. So no, you cannot pay that back.
Thank you.
To my knowledge. Yeah. Kim, you had your hand up.
Yeah, I was just looking over the questions. I saw India's question come up in there a while ago.
Oh, cool.
Answered, but
let me bring them up here.
So this is a two-parter. So there's lots of questions in here about equity and how to figure it out, not knowing what it was. And that's all good. I mean, we signed up to do life insurance. I got into this. I'm like, what is MP? What is MPP? What are we talking about? But look, there are great videos. What was Kimberly Noretto came from the mortgage side. So what was the series in workplace they can search for to help them learn more about that? I know there's not.
So we did a sell or be sold series, and so guys, all the equity is, and Lake answered it really well. It's the difference between what they would sell the property for and how much their mortgage is. That's it. You know,
And the easiest way to look that up is on Zillow. This is what I use. So if you look up Zillow, it tells the home property value. Then you would take what their note is on the form. So if they have a $55,000 mortgage, but their home is valued at $450,000, well, you kind of know this is an equity loan and not a new purchase, right? So before I contact the client, or before I go into the Zoom meeting, I'll have that prepared on my financial analysis. I'll go over my financial analysis the next time I'm doing a Wednesday winners, but it has that in there. So it'll say the home value, and then it'll say what they owe, and then the equity. And so you just tell them, hey, listen, my database might be a little bit off, but this is what we have your home valued at in our database. You don't have to say it's from Zillow. You just say our database says that your home is valued at $450,000. You owe $50,000, so that means you have $400,000 in equity. Let's go ahead and see how we can protect that for your family, because that's really a backup insurance plan.
Absolutely. And I use Zillow too, Mark. The reason that I always start with, if you were going to put the home on the market today, what would you put it on the market for? Because I want to hear the number that they say, right? Because they know their area better than Zillow does. They know that, this big manufacturing company is going in, 10 miles down the road, and that their property is going to go through the roof in the next 5 years, right? They know that kind of stuff because they're local. So I always just ask them. If they don't have an idea, I will literally share my screen and bring it up right on Zillow. And I just say, hey, this isn't a scientific, definitive answer, but you can see right here, they're giving you a range right here between, 425 and 450. So, I don't like to overinflate things. Let's just take the 425, but that's huge. You have over $200,000 of equity in your home, right? And I'm just having conversations with people. Mark is like, hey, I prepared all of this and I got it right here, and this is what it is. And that's just a difference in style. That's all.
But I might change that because, one of the key factors in doing a presentation is keeping that customer engaged, right? And if you're just spitting and dictating and spitting out all this knowledge to them, or everything that you've prepared for them, and you're not keeping them engaged, like having them read the chronic illness, the critical illness, or the terminal illness. That's what Nelson taught us to do. I do that every single time. Or, so I might do that, Jared. I might change that and just say, what do you think your home's valued at, or what would you sell it for? Because it makes them feel like they're part of the process.
They're part of the process. You're engaged with them, and you value their opinion. You are the expert here, but they feel like they're coming in board into this whole thing, and you're building this together.
Hey, one other thing that came up though was the India's question about what debts will the family be responsible for?
Let me see here. Zillow, my house, blah, 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 Lord. Which debts will the family be responsible for? So, technically speaking, I'm not. India, you can unmute and
Yeah, I'm unmuted.
What you got, girl?
So just when we're doing the financial analysis and we ask them, what debts do they have? Like which ones are going to be the most important to include in that? Like what will the family be responsible for when they pass away?
So be careful on giving definitive advice on things that you don't know all the ramifications of. So for instance, though, like if they have a joint credit card, on the hook, right?
Okay. Yeah.
Now, typically, if they have student loans, they're not on the hook, typically. And so what I'll say is, oh, you got some student loans? Oh, that's not a problem. Typically, now you need to check with your loan provider, but typically, if you have a student loan that and you pass away, they typically don't come after those. Okay, but you need to check.
Okay.
You cannot give advice like that.
Yeah.
When you pass away, because we just kind of went through this, my grandmother passed away, and everything gets locked into probate court, and they have to figure out your debt to asset ratio. That's why it gets locked into probate court, because creditors have first dibs on anything that you owe, and that's going to come out of the estate before the estate gets released to the family. And that includes home, credit cards, car notes. Everything that person owes is part of the estate, and creditors have the ability to withdraw from the estate in order to get paid back once that person passes away. Whatever's left over will get released to the family. This is why my grandmother on my other side lost her home, is because she was waiting for the estate to be released and she missed mortgage payments, right? So
and that's what I was going to say. While you're going through all that probate, you know who still wants their money?
Bank.
The bank.
Okay. Thank
And
you.
the bank
You're
doesn't
welcome.
care. They don't care what happened in your life. They don't want to hear excuses. It's F you, pay me, pardon the French. But it's, we want our money. That's what you have to convey to a client, that it's so important for them to understand that if the husband passes away and they can't afford their home, they are out. That is a fact. And that's what happened to our family. And, it happened to multiple other families. Jared's seen it a million times. So you have to make sure that they understand that if there's no money to have choices, whether to put it in the bank and make monthly payments or make a lump sum payment, that home is gone. And it's, so again, the estate and what they owe will fall upon the estate, and the creditors have first choice on it.
Not to mention, I learned this after I got into this. Bank accounts get frozen sometimes. I mean,
They can.
They might have the money in the bank and they might not even be able to make the payment because one of the people on the joint account died.
If it's a joint account, and that's why I explain it, Kim, I say, if you were to pass away, the money's going to go directly to, so Jared and Kim, your husband and wife. I would say, so Jared, if you passed away, Kim, that money's going to come directly to you. It is not part of Jared's estate because you are the beneficiary. So that means it's part of your estate. Okay, separate estates. But if you have a joint account and you put that money into the joint account, that could be frozen. So it's better to have, if you're going, you get that check, open up a bank account.
I always tell my clients that. Just little bitty pieces of knowledge like that, guys. I always tell my clients that when this happens, not if, but when this happens, and you get that check in the mail, do not put it in a joint account. You go down to the bank, you open up a separate account and put it in there. And for that very same reason that Mark just said.
Well, you call me and put it into an annuity.
Right, exactly. But you're really, guys, you want to become so valuable to your client as a resource that they have no other questions. You're educating them and giving them so much value far above just the mortgage protection. So, Delilah, you had another question? You had your hand up?
Yes, coming back to the policies where they withdraw the 95% due to a illness or whatever the situation may be, obviously the death benefit is going to go down by that much, and I'm assuming the premiums are still going to be the same, or will that be adjusted?
No, they're going to be the same because you've got the money.
Okay.
Yeah.
So for their best interest, I'm assuming they may have to cancel that policy since it's only worth, let's say it's $100,000 before, they took out 95,000 because whatever they're going through. So now it's only worth 5,000, even though they're paying 100 and something a month for that tiny little 5,000. Is that going to be at risk for it to be lapsed and or canceled?
So what I would tell you is the best thing for you to do is super detailed questions like this. Two things. Number one, ask your upline, offline, or call the actual carrier and talk to them and give them the scenario and say, hey, in this scenario, what would happen? And that's the number one thing, guys. The carriers love to talk about the products. They get paid to talk about the products, and nobody ever really calls them anyways. So if you have questions like that, it's a great question. But if you have questions like that, call them up and ask them.
May I interrupt and say something, Jared?
Yeah.
Because you and I and Mark can get really technical. May I caution all of you, if you still don't know how to handle your objections, if you still don't know how to book an appointment, if you still don't know how to do a presentation, don't waste any time calling the company with that question. Get your foundation done first. Learn how to do this, because that's a 1 to 2% of the time question. Focus on what you got to do.
Quarter of a percent question. I never get that question.
I never. That's why I'm saying we can do this, because it is interesting. But you know what? A lot of times we do this interesting stuff to distract ourselves from doing the hard stuff, which is we've got about 10 objections. If you don't know them, go to work.
Go to work.
Awesome phone script. You've got various versions of it. If you don't know it yet, go to work. Do the basics first, and then do the higher tech stuff later. Because if you don't, you're never going to get to sound like Jerry did tonight. I promise you.
You have to crawl before you walk. You have to walk before you run. You have to be able to do a 100-yard dash before you can do a marathon. So it all comes in correct succession, but sometimes we just want to go do the marathon before we can even crawl, is what Nell is saying. And so it's definitely important that you have the basics down, that somebody could slap you in the middle of the night and say, I got taken care of. You're like, oh, you got to do it. Oh, here's the answer, right? You know, you have to be able to hit it like that. You know, I already got some mortgage protection. Oh, I'm sure you probably want to get off this call list, right? You got to know. You got to be able to just jump in and know it, right? Because all of this, it doesn't matter if you're following this phone script or that phone script. All the phone scripts are very similar. They all do the same things, but it's all a Broadway show played by a psychiatrist. Everything is in there for a very specific reason. A very specific reason. So you may not know what that specific reason is, but if you go altering stuff before you know, well, now you're just kind of shooting yourself in the foot. So that's why we always say it's better to imitate before you innovate. Great job, Nell. Anything else? Guys, it is after 5 minutes after 8. Thanks for sharing part of your evening with us. Hopefully we got some good information that we can take into our business. But master your craft. Learn how to tell stories. And by all means, you better be doing a financial analysis in every single appointment that you have, because without that information, you are flying blind. All right? So thank you, guys. Have a good one.
Thank you, Jared.
Great job, Jared.
Thank you, Jared.
All right.
Thank you. Congratulations.
Thank
Thank